I've heard the expression money doesn't grow on trees many times, but wouldn't it be something if it did? And using that analogy, what I'm trying to do is I'm trying to create a portfolio of dividend paying stocks as well as bonds that will pay me $10,000 in cash, dividends, interest per month. And that would be a good part of my living expenses for my wife and myself. It's been a long journey to try to get there. I'm getting closer and closer each year. And I wanted to share with you my progress toward that goal and share with you the stocks that I'm currently buying to increase the amount of dividends as well as bonds that I'm buying to increase interest and having that goal of reaching $10,000 in cash per month. Now, what's neat about having an income portfolio of this type is that once I reach that goal and I have my living expenses taken care of, I don't have to sell any shares in stock to live off of. I can just live off the interest and the dividends, which would be really neat. So I can see my portfolio continue to grow as the market and these companies continue to appreciate in value. And I just live off the dividends and interest. It takes a long time, but I've got a couple years before I retire for sure. And I wanted to share with you the stocks that I'm buying that are dividend stocks, as well as the bonds that I'm buying, and also share with you the stocks that I'm holding, which are a good example of what I hold. Some of the stocks that I hold and I'm not buying more shares, it's not because the stocks are bad and I'm just holding. It's really because I've already bought so much of that particular company. I'd like to diversify. So I'm diversifying into other sectors and industries. Let me share with you more on my income portfolio and my bond portfolio. Over the last 30 days, my dividends and interest have totaled $6,408, which is better than last year for the same month. And a big part of that dividend rate comes from Chevron. Chevron's one of my bigger holdings on my income portfolio, and it's doing really well. Oil prices are up, and it pays a nice dividend. Ford also paid me two dividends in the last 30 days, and they really added up. I've had some dividends or interest from my bonds as well. In this case here, Exxon paid a $389 dividend, and Kroger was a nice dividend payer. I own quite a bit of Kroger. And the long and the short of it is, as I continue to accumulate stocks that pay dividends and accumulate bonds, I have a nice bond ladder going. I'm attempting to get this $6,408 up to $10,000 per month. And that would take care of my wife and I, our living expenses. That'd be a great goal. It'd be nice to get there in the next 5 years or sooner. So here are the stocks that I'm going to be buying in the next 30 days to increase the dividend stocks that I own. The first company I'll highlight is Ternium. And Ternium is a materials company. They both mine the iron ore and all the things you need to have steel. And then they convert that into rolled steel, which goes into products like appliances, cars, and so forth. They're in Mexico. And that's a real advantage to them because the American market. So they can both produce rolled steel that goes into the factories down in Mexico, near shoring, as well as shipping their product into the United States where it gets converted to finished product in the automotive industry, appliance industry, and so forth. They pay an 8% dividend. I really like the company. I'm up on the stock. I've owned it for some time, and I'm going to increase my position in TX. It's a pretty good sized position, and I'm going to increase it. Um, Whirlpool. I did a video on Whirlpool recently, and they just got to a price point where I just cannot resist. It's a 6.3% dividend. Whirlpool is a really good company, great brand. And I know that right now appliances, the sales is not growing all that dynamically, but I bet you in a year or two, that's going to change. And in the meantime, I get paid a 6.3% dividend. Pfizer, the healthcare sector has been beaten down, and Pfizer's paying a 6.1% dividend. This is Pfizer. This is historically one of the best pharmaceutical companies on the planet. Their science is some of the best science on the planet. They're coming out with a lot of drugs for cancer and other illnesses that people have. Of course, they stepped up and provided a COVID vaccine. So overall, I think the company is a very good quality company, and I get paid 6.14% dividend, which is great. I'm looking at bonds. They're going to pay up towards 6%. I'm looking at triple B rated bonds, corporate bonds, and I have a bond ladder that really goes 5 years. And I have videos on all these stocks that I'm sharing with you here, as well as my bond ladder, if you want to take a closer look at that. Vici is a stock that I'm building a position around, and Vici pays a nice dividend of 5.8%. Very good run, hospitality, casino, gaming, property company. It's a real estate investment trust. I think very highly of the company, and it's good to be an investor in Vici. 3M, I can't believe how low priced 3M is. This is another great American company. They're paying 5.62% dividend, and it's up. I'm up on the stock. In 2024, the stock's doing well, so I get both a nice dividend and it's appreciated, which is great. A little more risky is Zim. Zim is an integrated shipping company, and shipping rates have really fallen, but Zim is very well operated. They pay a 4.18% dividend, and I think there's a lot of upside there. If shipping rates go up, the Zim price, the stock price is really going to go up as well. AbbVie, one of the best pharmaceutical companies around. I'm going to continue to add shares in AbbVie, paying a 3.47% dividend. CVS is really discounted, in my opinion. They just continue to grow their revenues, operate profitably, generate great free cash flow. At a certain point, that's going to matter. To this point, they've been very discounted, which has been a surprise. But I think over the long haul, I think the value of those free cash flows is just going to be too much for investors to ignore. Qualcomm pays a lower dividend, but I really want to buy into another semiconductor. I own two semiconductors, so I'm buying into Qualcomm. Cigna is a great, dividend insurance payer, health insurance payer. They pay a 1.59% dividend. Baba pays a 1.4% dividend, and then Apple pays a tiny dividend. So those are the dividend stocks that I'm buying into. I'm not recommending you buy any of these stocks. I'm just sharing with you my journey as I try to get to $10,000 in dividends and interest paid to cover all my expenses in retirement. Taking a quick glance at the dividend stocks I already own and I'm just holding. And big reason on some of these is I already own quite a bit. Chevron, as an example, that's probably the biggest position of my dividend stocks. And the reason for it, I worked at Chevron like 30 years ago. So I have a little bit of a loyalty there. And I started accumulating shares way back when. So that's a pretty good position. The other stocks that I have a sizable position on are Kroger, Citi, Ford, and AT&T. So these are really good quality companies. And then I have some riskier stocks. Like an MPW is very risky. That's either going to be worth a lot more or it's going to be continue to go down in value. The reason it has such a high dividend yield is the stock price has been really going down. I'm down on that stock. I've been losing probably at about a 40% loss on the stock value, but it pays a high dividend. If the company manages to operate out of the troubles they have, it should, the stock price should go up. And in the meantime, they'll pay a high dividend rate because they are a real estate investment trust. Another one I would highlight is Panel has just been a really nice, consistent high dividend payer. And they're a shipping company. So I like Panel. I have a nice position with that company. And the rest of them, it's just good diversification across different, sectors and industries that collectively, those are the bonds that are going to be producing the dividends that I want to get to that $10,000 goal. In addition to buying dividend paying stocks, I'm also buying bonds. And the reason for it is bonds have lower risk. You have a maturity date in the future, and you're pretty much guaranteed, unless the company goes bankrupt, that you're going to be paid the face value of bond. In this example here, Target is issuing out bonds that they're going to redeem on April 15th, 2029. So about 5 years. And it's going to yield about 4.6% dividend, which is a nice dividend. And at the end of that term, I'm guaranteed that in most cases, you're buying bonds at a $2,000 increment. I'm going to be guaranteed my $2,000 back, and I'm going to be paid that dividend or interest rate amount. That's a nice way of adding interest without having a lot of volatility. I know stocks can go up and down. The market's a little overpriced right now, in my opinion. But I think bonds is a good way of having that really nice cash flow and having more stability and lower risk. One of the goals that I have in my investing is to really have an income portfolio that's going to produce $10,000 of cash flow for my wife and I to live on. And it's a really good goal to have, and I'm going to work towards it. My goal is to be there within 5 years. I hope you found my video interesting, and I really appreciate you watching.